Hi everyone, it's your daily 10-minute business and finance news wrap for this Friday, the 21st of October 2022 from the SBS newsroom. Later, how the political mess in the UK has impacted share markets, but first to how the floods will impact food and vegetable prices. The Treasurer says they'll rise by 8%, but what do the farmers think? Earlier, I spoke with Shaun Lindhe. He is a spokesperson at AUSVEG. Shaun, first of all, how important is the fruit and veg industry to the economies of the areas being flooded right now?
Yeah, so the areas that have been impacted by floods at the moment, they rely on a thriving agriculture sector to survive. So not just fruit and veg, but also dairy, livestock, poultry, a whole range of agricultural sectors. Particularly when we look at the Northern Victoria region, it's a really big fruit growing area for the country. So and there's also some vegetables as well, but primarily we look at sort of the fruit growing of the region. So the floods are having a really significant impact on those communities, and there is plenty of fruit and veg grown in these areas. When we look at sort of specific crops, a range of crops, but primarily things like stone fruit, also apples and pears, peaches, nectarines, tomatoes. A lot of produce comes out of this region. So we won't know what the exact impact will be of the floods in terms of what happens with the production of crop in the soil, but there will be ongoing impacts to logistical challenges getting products from the farm to consumers, so damage to roads and diversions along major freeways to add time through a supply chain. But there also will be some medium or long-term impact on the availability of some crops sort of going into summer.
Can we go into more detail about that? And I know you touched on it. So given where we're seeing the flood impact, what kinds of fruit and veg do you think will be impacted in terms of availability and of price?
Yep. So when we look at an event like this, we rather than focusing on specific crops, we look at what happens in the region. So if we think back to earlier in the year, over winter, we saw some price increases for some vegetable commodities that would ordinarily have come from the southern Queensland region, which is where the floods in those regions impacted sort of earlier in the year, start of winter. So when we look at the Northern Victoria region, that's a lot of fruit. So a lot of things like apples and pears, plums, nectarines, peaches, other stone fruit. There's tomatoes grown in the region. There's probably, in terms of vegetable production, there's probably some smaller scale producers that do a wider range of crops. But in terms of the major products that will be impacted or that may experience an availability issue into the sort of medium term, primarily looking at those fruit crops from that region. It's a really major fruit growing region for Victoria, definitely, and does supply fruit through the East Coast and to the rest of Australia as well. So if there's any sort of availability or supply gaps coming from that region, it will likely impact on the supply of product. And given the supply and demand nature of the fresh produce sector, that will impact on price. It's a bit too early to know exactly what that price increase will be. There are farms in the area that still have water, are still impacted by flood. So we can't really assess the sort of the regional impact of what's happened. And we also don't know whether this will be the last significant rain event that comes to the region as well. We're still expecting the La Nina to deliver some wet weather into November and December. So in terms of the impact on consumers in sort of the medium term, there may be other weather events that come to different production regions that then impact other crops. So short-term, immediate impact on the increased challenges of getting product to consumers with things like road closures and other infrastructure sort of challenges through the supply chain. But in terms of the different availability of crops into the medium term, it's still a bit of a wait and see moment.
So does that mean, given there's the issue with availability, a lot of these crops are underwater, even when they come back, as you mentioned, there's those transport logistics, there's potholes, the potential for more weather. Does that mean high prices for fruit and vegetables for a lot longer, do you think?
In terms of the impact on price for consumers, it is a little bit of a, we don't know what the situation is yet. It may be that once the water clears, we may be able to salvage more crop than we expect. And so the availability impact on consumers won't be as great, and therefore the price impact won't be as great either. So once we sort of have a more proper assessment of what has happened in the region in terms of the production losses, and not even just crop in the ground, but also when the ground is really wet, particularly for vegetable producers, it's hard to get sort of machinery and tractor on farm to prepare for the next crop. It can, floods can impact on topsoil, which needs to be replaced, which again adds time to the supply chain and to the growing cycle of crops. So once we have a better understanding of the exact impact of that, then we may be able to sort of track where or anticipate where some of the supply issues may be in the medium term. But at the moment, it's still an ongoing situation. We still have farms that are underwater. So it's a bit too early to be able to sort of give that prediction as to the impact on price on consumers. What I will say, though, is what we saw earlier in the year with the floods in southern Queensland was a particularly significant impact for a major region that supplied product for that time of year. So southern Queensland's a major supplier of winter vegetables for the eastern coast. And so because there were significant impacts on the availability of product from that region at a time when that region was supplying a lot of the country's vegetables, we saw significant increases in demand for particular crops, AUSVEG lettuce being one of them. So whether we get to that extent, it's unclear at this stage. But from a vegetable perspective, we still have plenty of other growing regions that haven't been impacted by floods as much as the northern Victoria region. So it is unlikely we'll see it get to that extent unless there is more weather events that impact other regions.
Shaun, Lindhe there from AUSVEG. Now to the Australian share market, which closed the working week down. The S&P ASX 200 off by 0.8%, 6,676. For more, I spoke earlier with Mark Gardner. He's the head of trading at Maqro Capital. Mark, the political instability in the UK, to what extent does it impact equity and currency markets?
Look, the gravity of the basket case that's going on in the UK over there at the moment, I don't think the markets would be very surprised by anything, to be honest. Obviously, the political turmoil, they have had, I think they're going to be electing their fifth Prime Minister in 6 years. So political instability is not exactly a new thing for the UK public. What's probably of greater concern is the fragility of the financial system over there. They're certainly, on the edge in terms of the leverage in the pension system, etc., which the Bank of England had to step in and support confidence in. So, and I think rising bond yields is going to, is obviously going to really hurt them. So, whilst the Fed's continuing its very repetitive, higher for longer, I dare say, the sterling's got very little chance of recovering at this stage, but that could be a lot more to do with just broader US dollar strength necessarily than pound weakness. So it's definitely something to monitor. But look, it's a services sector there in the UK. We've seen a lot of even the banking services sectors basically just shift to other locations in Europe. So in terms of the global economy, net it's not really affecting anything, but obviously it's not great for the UK economy. So they, this has been coming a long time, since they made the decision to do Brexit, and I don't think markets are going to be dramatically surprised by just a general drop-off in the UK economy persistently. I don't think we even saw the FTSE regain 2019 highs during the bull market last year. So, it's not really something that, is probably not. It's probably already baked into markets, I would say. But obviously, key event risk is probably the big issue.
So, in terms of why the market's down today, the UK no real impact. But what drove shares here?
If anything, I think the resignation of the Prime Minister actually had an initial positive effect on the pound. So, which is probably not good for a poor beaten ego of Liz Truss. But there's been plenty of financial memes today saying the lettuce lasted longer than the Prime Minister. I think someone had a live feed. So I don't think that's really much to do with today. It's just broad. At the moment, it's very difficult for the market to rally with rising bond yields. We've got 15-year highs in 2 and 10-year bonds in the US Treasury yields. So and the negative news cycle is just intense at the moment. I mean, I think nearly all of the companies that gave quarterly earnings updates in the States last night beat expectations, but the pundits went through with a fine-tooth comb to find any form of negativity. So, those two things combined, it's going to make it difficult for markets to rally, but it also potentially makes it quite ripe for a bear market rally at some stage pretty soon as well.
So I guess it's those longer-term interest rates that are having an impact. We'll get official inflation numbers out of Australia next week. It'll flow through to interest rate implications here in Australia. What's the market expecting will happen with interest rates here?
Yeah, we tend to follow the US market. Obviously, not much happens without the influence of Big Brother. Basically, we were surprised by the 25 basis point hike from the RBA. It was less than expected. So, we have quarterly numbers here in Australia. So it is a big spike up to, I think the expectation 7% year on year. The trim mean expectation is about 5.6%. So the RBA did sort of specify that they would rather be a little bit more measured and incremental in their rate hikes. So more like a series of 25s rather than the big hikes that the likes of the US are going for. I tend to agree with that philosophy. I know that, I'd probably be in a small camp there of opinion. I think there's been a lot of criticism of the RBA recently, but I don't see where waiting a month or two and getting to the same point incrementally, I think is probably a more sensible plan than trying, the shock and awe that's going on, with the likes of, New Zealand and the US. And look, it hasn't helped New Zealand so far. Things have just primarily gotten worse. So I dare say we're going to need a pretty high print for the RBA to change course. So anything around that expectation, I think we'll probably see, the RBA continue on that, measure an incremental path.
Cybersecurity. Medibank still on a trading hold. I think it's going to be on a hold for longer than we thought. These breaches, generally, what do you think it means for companies? And to what extent are shareholders expecting companies to be more secure or demand better governance when it comes to cybersecurity measures?
Well, the shareholders have got to weigh up two things. Obviously, making tighter security is going to involve capex, which at the moment is frowned upon by the market because of the current market conditions. But these companies, and obviously Medibank's not on their own here. Apparently, the Optus breach was fairly rudimentary in terms of breaking through an APIs. So it's these companies need to start spending money now and listening to their cybersecurity experts, which have been saying this ad nauseum for many, many years. Otherwise, the government's going to come down fairly heavy-handedly with very tight regulations, and in the long run, it's probably going to cost them more, not only in fines but probably in a stricter regulation. So, it's not going to be necessarily popular having to go and spend that money, but I think if they don't self-regulate, it's going to force the government's hand, and that's going to be bad for everyone across the board, in terms of capital expenditure.
Just finally, in this environment of rising interest rates and inflation, without going into stock specific, but where do you see the opportunities?
Yeah, look, it's hard to. I think what you need to be looking for is companies that have either a first mover advantage or they are taking advantage of a future structural shortage, say materials sector. But companies that are very much on the up that offer a service innovation that's needed rather than wanted. Discretionary spending is going to be hurt by the predicted recession. So something in the healthcare sector, obviously the EV battery thematic's been going quite well, but these things are all happening for a reason. And 10 months into a bear market, we do tend to forget that some of the biggest companies in the world all cut their teeth in turbulent and recessionary times. I think Facebook and Tesla were both founded at the lows of the bursting of the tech bubbles. So there's definitely opportunities out there. And you probably just have to, go and find a few companies with bright futures, and given the market conditions, you just approach it from a measured manner and maybe just dollar average instead of going all in. But yeah, no, there's definitely a lot of opportunities out there, and particularly in the long-term scope. But yeah, look, if you're looking for short-term wins, that's going to be very dangerous. Yeah, have a look for companies that have a unique edge, and you should do pretty well on a 2-year basis.
Mark Gardner there from Maqro Capital. This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.